Welcome to the Net Profit Podcast with Ryan Kibler, your net profit CFO, helping business owners like you grow their net profit one episode at a time. And now your host, Ryan Kibler.
Hello and welcome to another episode of the Net Profit Podcast. I'm your host, Ryan Kibler, the Net Profit CFO. Today, I am doing an episode solo. Today's episode is going to come out October 1st, 2025. And we are starting the fourth quarter. Might not feel like it. I know it doesn't for me. This year has absolutely just flown by faster than any year that I've had in business. Maybe that's good. Probably have, super full calendar, as I'm sure you do as well. So as we start the fourth quarter, really big, important thing to do, in my opinion, is really some annual strategy, annual planning for the next year. So that is what I'm going to cover today, probably for the next 10 or 15 minutes here. Might not be as long as a normal episode if I'm sitting going back and forth with somebody, but feel like this content is really important and annual planning is really important for your business. So let's dive in. First of all, annual planning is something that I do with all of my clients. It's a part of the process. We all have probably heard the saying before, what you focus on really gets better. And from my experience, the same is absolutely true with your numbers, with your finances, with your planning. I would highly, highly encourage you, pick out a day here in the fourth quarter to just work on building out that plan. So first thing that I would do when you start working on annual planning is, first of all, let's assess where you're at currently, year to date. So if you're doing this in October, you could look at January through September. Where am I in business? What do my numbers look like? What have I made in sales all the way down to profits? What have we made in cash flow? Have we added cash to the bank? Just look at where you're at for starters. I think that's a great place to start and assess and figure out, what do you want to be different for next year? I will say from my experience, most business owners don't even simply take the time to sit down and do that. As a business owner, I know it can be really tough. You can really get stuck in the day-to-day. There's hundreds of things we could be doing every day, and it seems like the to-do lists never get shorter. But again, I really want to make the case here that annual planning, especially on the financial side, then you get into the other pieces on the operation side, building out that plan so that you really make progress in your business. Really, really important. So again, let's sit down. Let's figure out where we're at. Maybe this day, maybe you want to book out a conference room somewhere outside of your office, outside of your place of work. Just be alone with maybe some trusted advisors and really work through this stuff. So once you kind of have assessed, spent some time, figured out where you're at, let's start looking at next year. So let me start with what not to do. In my opinion, a lot of business owners, their annual planning is, well, I did $1 million in revenue this year. Next year, I want to do 1.6. And that's where it stops. And nothing else happens. They just set like a revenue goal on, this is what I want to do in sales. And I think that is the absolute wrong way to go about it. Don't do that. You could grow your business in revenue and lose money, lose cash, and not have a healthier business. So here's where I recommend starting, and I'll kind of walk you through my process here that I normally go through with my clients is, let's start with number one, how much cash do you want to add to your business? Now, when you think about adding cash to your business, context matters, but I think we're adding cash for stability, and we're adding cash for emergencies that might come up, and we're really adding cash for financial health of your business. So what's in your bank account probably either helps you sleep at night or you lose sleep at night over. So if your bank balance right now, maybe it's $50,000 in total, maybe that's, what it is, where it hangs around. Maybe you want to move that number to 75 and you want to add $25,000 to the bank. Great. Let's start with that number. What is the end goal? What is, if you get to the end of next year, December 31st, 2026, what would make you happy? What would make you feel good about what's in your bank account? Start with that number. Next number I love to go to is, what do you want to take home as an owner? As a business owner, I'm sure that you're very productive, very talented, probably while you're out on your own, not just working for somebody else. Eventually, if you're, an entrepreneur and again, a highly productive individual and very successful individual, eventually wages at a W-2 job can't keep up with what you can make on your own. And maybe you wanted to control more of your own time, but really put down a number. What do you want to take home? What is your goal? Being a business owner, you're obviously going to invest a lot more time than you would if you just had a W-2. Forbes put out a study last year that the average small business owner salary was around $70,000. So now I know, there's probably some outliers in there that really drag that down. An example would be, I know in the United States today, a lot of realtors that are just hobbyists do a couple deals a year, right? Probably paying themselves a salary that probably really drags things down. Okay. But in my mind, if average household income today is mid upper 50s and the average salary of a business owner is in the low 70s, let's make sure our time and effort's really worth it. Let's make sure you're being compensated and meeting your personal goals for what you want to do as a business owner. And then that really gets me to vacation time. So not just what you want to take home, but also how many weeks of vacation are you taking? Again, you could build a great income, but if all of your time is taken up pouring into the business because you don't have systems in place or you don't have the right people in place and you can never go on vacation, it's probably not worth it. Eventually, you're going to burn out. So start with those two numbers. How much cash do you want to add to the bank? And then how much income do you need for yourself to meet your personal needs and goals and really live the lifestyle that you want to live? Then from there, let's look at how much debt do we have to service. If you don't have debt in your business, that's okay. You can skip this part. If you have credit cards, that counts as debt. So how much debt do we have to service? If we have credit cards, hopefully you're setting a target to really make a big dent in those if you've got a major balance. If it's a small balance, I want you to make a goal of paying it all off. Let's get out of debt, make the business debt free. Then after that, I love to talk with owners about any major purchases that they need to make. I'm just going to throw out an example. Let's say it's a landscaping company and you need to go out and buy another truck. That would be a large purchase, and really factor in how much money really you've got to put down. So let's just say it's a $70,000 truck. You got to put 20 down. You need to factor in 20 grand cash. And then obviously you're going to have payments after that. So let's factor in, if your monthly payment's $500, you're going to buy it in, let's just say March to make it easy. You're going to have 10 payments. You got 5 grand that you got to account for. All right. So that's 25 grand in total. Put those numbers together in your plan that you've got to make. So let's add up and figure out what are all the activities that take up cash so we know how much cash we need. So far, you should have how much cash you want to add to the bank, what you want to take home, what you're spending on debt service, and then any major purchases. Those are really important things to handle. And then also, don't forget about setting aside some money for taxes. So factor that into your number that you want to take home. So if you want to net $150,000 a year in salary or total compensation in distributions, what have you, obviously you're going to have to make more than the 150 in order to account for taxes. So kind of factor that in, use a rough estimate, work with your tax accountant, figure out what your gross needs to be in order to net down to that 150. All right. Last activity here that really takes cash that's really important to look at is receivables. So this is if you take on a project, again, let's say you're a small construction business, maybe you're doing a remodel, what you bill your client, maybe you've fully done the work and maybe they're paying you in installments. So receivables is you've billed the work and your client has not paid you yet. So let's just say it's 5 grand, you would have $5,000 in receivables. So calculating and factoring in, what's your work in progress, what is not going to be paid by the end of the year. Really, really important. Again, that's another activity that's going to take cash. So that finally gets us to, if you add all of those items up, that gets us to what your net income needs to be in order to meet all of your goals. So In total, again, let's just roll with a salary of 150. Let's say cash out of the bank is 25. That gets us to 175. Plus, you're gonna have to add some for taxes to make it easy. Let's say no debt, no major purchases, and let's just say no accounts receivable. Your total number there would be 175 that you would need your net income from the business to be. Then from there, it's really important to look at all of your expenses. Number one, what does it take just to kind of keep the lights on, so to speak? Is a good terminology for it. But think of things like office rent, utilities, softwares, supplies, office supplies. Basically, what does it take to run a brick and mortar? That should be very consistent year over year, unless you're expanding and taking on new space. So factoring that in, adding that on top of your net income. And then the last two really expense buckets to look at that are really important is marketing and payroll. So marketing, what are we going to spend in marketing? Where are we going to spend it? What is our expected return? These are all important things to think about as you're doing your annual planning. Basically putting together, what's our budget for marketing for next year? And then on the payroll side, really looking at, do I have the right team now? Are they compensated appropriately? Who do I need to hire next year? What is that going to cost? Are my health insurance costs changing for next year? Really looking at and putting together a total number for what does it take to fully pay my people. Again, and in this number, you should include your workers' comp insurance, you should include your health insurance, all important things to know. And then that really brings us up to what your revenue needs to be. So adding all of our expenses together, adding together all of our activities that take cash gets us up to this is what I need to bring in business and sales revenue. Words are interchangeable. You can use either one. And then from there, after you have your main total revenue number, that's really the last number that you're going to generate. And then if you're looking at your formula and you're like, by this formula, I've got to make $3 million in business next year. This year, I just did 1 million. Most likely that's not possible. That's too much of a stretch goal for me. Then it's time to go back and really look at what numbers can we change? What drivers can we change? I call all of these, they're drivers of profit and cash flow. So what can we change to make an impact and not have to grow the business from 1 million to 3 million in 1 year? You don't want to set yourself up for something that's unrealistic or something that you're just going to fail. So if your revenue number is not realistic, you need to go back and again, look at what can be adjusted, look at what needs changed, and see what you can impact in order to bring the revenue number down to where it needs to be. Then after you have your revenue number, let's just say it's $1 million in business, I think it's really important to sit down and look at what am I selling? What are my services? What are my products? What are the price of those? And then you can get down to how much volume you have to do for each service that you offer. If I just made things really easy, let's say you're $1 million business or you want to do $1 million in business, and let's just say that you sold one service, and let's just say that the service price is $5,000. Obviously, at that point, you would know that you have to sell 200 of those services. And then, obviously you could divide that out monthly and figure out, okay, I've got to sell this many services each month. So you can really break things down and get down to one final number of I've got to sell this. And then obviously you can monitor your expenses, monitor your cash payments out as the year goes by next year, but really sit down and put together a plan. This is something that should take a few hours for you to do. I mean, just putting together a plan around your people and payroll and who you're hiring and how you compensate people, reviewing what you currently have. I mean, that, could take an hour in itself. Same thing on the marketing side, strategy there, where you're spending your money, what channels you want to market in, what returns you expect, where you've been spending your money this year, all of those kind of things. Again, really take time. I mean, even getting down to a good number for yourself on what you want to take home, what your goals are, to fulfill your lifestyles and your needs, sitting down and really figuring that out, figuring out how many vacations you want to take a year. This should all be something you should spend some time on. I highly recommend for all business owners, just take a day. Figure that out in your schedule. Take a day to just be focused on this, work on this, put this together, put together an initial plan. And again, this is something you should start being focused on in October, November, December. The earlier you start, the better. I would recommend start early, work with some advisors, work with people in your life that you trust, and then, come back to it. Again, if you put it together beginning of October, come back to it beginning of November. Doesn't have to be as long of a period, but spend a couple hours, come back to it. Does this make sense? Is this still where I want to be? Is this still in line with what I want to do? Just to make sure that you've got a great plan laid out for 2026. You're prepared. You know what you need to work on. And again, as a business owner, you'll be doing hundreds of things every day, and you don't want to waste your time, right? Time is important to all of us. And so, again, putting together a plan that makes sense is well worth your time, well worth the investment to know that you're on the right path, on the right track, spending your time wisely, and really moving the needle forward each year. So I hope this is helpful. I just packed a lot here into about 20 minutes. Highly recommend, if you need to, go back, rewind it, listen to parts again. But until next time, everybody, go and accelerate your profits. See ya.
Thank you for listening to the Net Profit Podcast with Ryan Kimler. Make sure to subscribe or follow the show on your favorite podcast app. Don't forget to check the show notes for our guest contact information and to connect with Ryan on his website, netprofitcfo.com.